All right, let's start. I think let's start. So we all are done with support and resistance, isn't it?
Yes, please.
Yes, sir, we are done, sir.
Okay. Now, let me talk about the support and resistance before we move on.
Okay.
You see, this is a card Canadian dollar and France.
Okay, sir.
So you see, this man nice is on a card sheet for a sell, for it to go short. You see, now when analyzing the market,
Okay.
we have two. We only have two types of markets: the bullish market and the bearish market. You understand?
Okay.
Now
Yes, sir.
we also have the trend and correction. You can call it correction. You can call it consolidation. You can call it a range market. We have two types of markets.
Okay.
We have the bullish market. We have the bearish market. And we have the range market, the consolidation market, the range market.
All right.
So, like I'm saying, the bullish market bearish market All right, can you see that?
Yes, sir.
Now, this is it. You see, the bullish market is when market is going up, as we said before. Now,
Okay.
you see, once you see an impulse to the upside like this, a sharp impulse. When the market is at this level with a sharp impulse to the upside, that means the market is bullish, because the movement is so straight and sharp, and it's not like it's consolidating. You understand? So it shows that there is more momentum, there is more move to the upside than the downside. So as a trader, you don't just jump into the market because the market is going up. You understand?
Yes, sir.
You don't just jump into the market because the market is going up. What you do, you wait for a correction to happen, which is the consolidation market or the ranging market. You see moves like this. The ranging market comes in different forms. You understand? It can come in a zigzag way. It can come in a zigzag form. It can come in a triangle form, symmetrical form. It can come in any form. So sometimes you might get a sharp zigzag like this. And after that, you get another push-up. So you see, this trend that you're seeing here, this one here, we call it impulse.
Okay.
This one, While this one that consolidate, we call it correction movement or ranging market.
Yeah.
You can call it like we call it correction. It corrects the previous move. You understand? Wait. Let me reduce this. All right. This one now we call it correction. And this one impulse. Are you with me?
Yes, sir.
Mm-hmm. So you see, when you open your chart to analyze the market, any market, first of all, you need to identify the support and resistance. This is our support. This is our support. This is our resistance. This is our resistance too. And this is our support also. So when you go to the market now to analyze, when you put your support and resistance, next thing that you check is where is the market. For example, we don't have this. For example, now we don't have this. Now we don't have this. Okay. We only have this. Okay, for example, now we don't also have this. For example, we don't have this. We only have this. Now, you wait for correction to happen. You understand? You wait for correction.
Okay, sir.
You must get something like this. You must. It can come in any form. It can come in a move like this. Like this. It can come like this. 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 Then boom, up. So, you see, I'm coming. Let me remove it so that you will get what I'm saying. Now, when the market comes like this, 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 yeah? This is where market, this is where traders, and this is where markets, this is where traders get trapped, and this is where we lost money. This is where we do lose money 90% of the time. So now what you do is what? As the market is, you've already seen that this is an impulse move because it went in a sharp way, and this one is coming in a corrective move. Once you know that this market is a bullish market, so what you do is what? You either plot your Fibonacci level or you wait for a breakout. Now, if you want to wait for a breakout, you bring in your trend line. You plot your trend line like this. You tag the like this. You wait for a breakout. You wait for the market to rise and break these levels. If you watch, the market was going ups and down, and it couldn't break this level. I couldn't break up, break down. So all you would do is what? Is to wait for a breakout to the upside like this and close. Then you can now open position. When you open your position, the stop loss will be below the structure. Your stop loss should be around this level. This level. This blue box. You see?
Okay, below this support.
Yeah, below the support. Because the market can also come to that. The market can also. the market can also come to this level and still come down again one more time before going up.
No.
You understand?
Yes, I do.
Yes, sir.
So in this, there are some traders when the market is coming down like this, like once the market makes something like three touches, like 1, 3, they will pick position. But why some traders will patiently wait for breakouts at the upside for them to take and close their book and pick their position. You understand?
Yes, sir.
So I think the best way is to wait for the breakout, because normally we do in price action traders, they normally call this kind of structure flag continuation pattern. We call it flag continuation pattern. You understand? So you wait for break. But there are some cases you might take this trade now from this bottom. You might take this trade without waiting for breakout to the upside. You might take this from this bottom and you'll be profitable and keep going. And sometimes you might take this trade from this bottom now, and the market will push a little bit lower and drop.
Okay.
Are you with me?
Yes, sir.
So the only thing that will invalidate the structure is fundamental news. There is a kind of news that will come up now that will invalidate this structure. But in the technical aspect, when you wait for the breakout at the top, this level, close above, you pick your position. You can put your stop loss below this level. You can put a stop loss here. I'm coming. You know, stop loss always red. Is a red because it's a loss. So you can put your stop loss here, and you can also put your stop loss below the support. You understand?
Okay. Yes, sir.
So now this is it. You can get something like this once the market breaks above. Once the market breaks above, are you with me?
Yes.
Yes, sir.
Once the market breaks above like this, sometimes you get corrections like this. I'm coming. Once the market breaks above, you can get corrections like this, like this, like this, like this, then up.
Okay.
Are you with me?
Yes.
Yes, sir.
All right. So anybody that is trading this ranging market is trading against the trend. So you have to be patient, because most of the times what kills us more is impatient to wait for trend to complete, to wait for that particular structure to complete. So some of the time, the market might not come in this form. Are you with me?
Yes.
Sometimes the market can come, like I told you, the market can come, you have different kinds of correction patterns. This one I just show you now is called flag pattern or triangle. Sometimes the market can come in a simple correction move like this. Like this. It's very simple. Like this. Like this.
Okay.
Next thing, up. Are you with me?
Yes.
Yes, sir.
And sometimes the market might not come in that form. It can come in this way. Don't worry. I will show you all that. And I will send you a book for that. Sometimes the market can come like this. Sometimes the market can also be like this. And test the previous top. And test the previous low again. Then up. Now, you see this correction pattern now, all these correction patterns, they have their they have their names. Like this one now is called regular flat correction.
Okay.
You see, impulse, correction, impulse. So all you're after is the correction, is the impulse, not correction. All you're after is the impulse because that is where the money is, not correction. Because correction, market can change. Like this, like you might see the market forming flat correction. Next thing you will see, it has formed an irregular flat or regular flat correction, or just different kind of, because it's where the market get manipulated and nothing will happen. You will lose the money and nothing will happen. So the best thing is to wait for the correction to be completed. Then either if it's a breakout structure, you wait for the breakout, then you enter your position and you calculate your risk and set your stop loss and ride the market. Understand?
Yes, sir.
All right. So when we go to the market now, let me show you. Flat correction. I will show it to you here now so that you see it. You see, we have this is a card chief. I told you this is a card chief. Now you see, we have things like this. All right, I think another color so that you'll be able to see it. Pop layer. You see, we have what do you have here? We have sharp impulse to the upside. Am I right?
Yes.
We have sharp impulse like this. Now, what will you do as a trader? You wait for the correction to happen, isn't it?
Yeah.
Now, let me change this color again. Sorry. Now we have another correction. See, we have sharp impulse. Now we have correction again to the downside. Are you with me?
Yes, sir.
I'm coming. Let me change it to right. We have another impulse to the downside. We have another one again to the upside.
Okay.
Yes.
Let me change it to white. We have another one again to the downside. We have another one again to the upside. You see? Now,
Yes, sir.
we are one more down before we'll be thinking of having this similar move to the upside again to complete this structure. In order to complete this structure, we are expecting move to the downside like this to this level. And if we get this move to this level now, let me change it to red. Now, if we have this move to this level now, that means the structure is now complete. Then we can now happily ride the trend to the upside. Now, in this market now that you're looking at, right, we are having different kind of price action. We have flat correction, which I just showed you from the graph, and we're having head and shoulder.
Okay.
Can you see the head and shoulder? Hello?
Yes.
No. No.
All right. Now, this is the left shoulder. This is the head.
Yes.
And this is the right shoulder.
Oh.
Now, once this market is like this, there is nothing on earth that will stop this market from going up.
Okay.
Now let me make this let me make it look more clearer. Now, like I told you, we are expecting one more push to the downside. Let me tell you something. This market repeats itself every day, every time in the market. Now, what you see here is what you see tomorrow, and is what you see next tomorrow. The only thing is that you need to train your eye in order to see them or put them when once is happening. Now you see, we are having, like I told you, This is it. Then this is the flat correction. This is the flat correction. This whole stuff said. You see, this is a flat correction. Now we are expecting this same move. You see this move here that went down like this?
Yes.
Yes, sir.
We are expecting it to repeat itself here again. Are you with me?
Yes.
Okay.
Once the market repeats itself here now, then we are expecting this same move again. This particular move now.
Okay.
This move now. You see this move? Then we'll be expecting it.
Yes.
We'll be expecting it to happen again. So which I showed you, I said impulse, correction, impulse. Am I right?
Yes.
Yes.
Impulse, correction, impulse. Now, you see, we also have Fibonacci levels where you'll be anticipating a reversal. You understand? Like price action traders, if the market did not touch this level, not pick any position. But in other words, sometimes the market cannot get here because all these things that you are seeing are zones. The market can come to this. The market can stop here. The market can stop here and start going up. So it's still correct because all these levels are zones. It must not touch this place 100% of the time. So what you will do is what we have Fibonacci levels, which I will show you later because I will not take everything at once so that you guys will not be confused. So maybe some other time we'll pick the Fibonacci levels.
Okay.
Like when I plot my Fibonacci from the beginning of the trend to the end of the trend, previous trend, you see, in order to get a complete head and shoulder of this side, it means the market will touch 786%. 786%. Sometimes the market might not touch this 786%. The market might stop around here and start pushing up. You understand? So it doesn't mean that it's not correct. It's
Yes,
also
sir.
correct. You understand? But
Yes.
discuss about the Fibonacci level next time we meet. What I'm trying to tell you guys is, you see, when you put your support and resistance, next thing you do what is to put the where the market is going to. Like this, let me tell you, you can do your analysis on any time frame. Like this analysis that we are doing right now, on 1 hour time frame. You understand? But in order to have a bigger picture of the trend, where the market is going in general, and you know the cycle of the trend, you need to analyze the trend from like weekly, daily, 4 hour, and you pick your position on 1 hour and you set your stop. You understand?
Yes, please.
Okay.
All right. So now, let it come next week. By this time next week, we will still look at this particular market. You will see that this market will surely come to this low before pushing up, and we will still follow this trend till it started going up again. So you see, what I'm trying to tell you is we have 3 types of market: bullish markets, consolidation or ranging market, and the bearish market. You understand? Now,
Okay.
Yes, sir.
now let's look at the previous trend. You see this, you look at this place now. You see this place? You see this place?
Yes. Yes, please.
Yes, sir.
Now, we have impulse to the downside, sharp impulse to the downside, right? Like this. Sharp impulse like this. The next thing,
Yes.
the market start correcting. You see? The market started correcting again. And if you look very well, all you can see here is flat correction. And the market pushed down. And if you look very well, it's exactly what is happening in the current market. So that's why I said whatever that happens will still happen tomorrow, happen next tomorrow. The only thing is for you to study the market and master it so that whenever it's happening, you know what to do and you know what will happen next. You understand? Like I told you, so many people are buying this market that you're seeing now and they are on losses, and so many are selling it and they are on profits. But the thing is, it depends your risk. Most people, both buyers and sellers, you normally end in profit. So it depends on the market approach or market techniques that will, that will inhale you success. You understand? You see, here we have correction and we have a sharp move to the downside. And now we have a sharp move to the upside and we're having another correction, which we are expecting to push to the downside like this. When we get one more push to the downside, then we expect again to the upside, which is impulse. You don't trade against the trend. You wait for the trend, the correction to complete. Most traders will patiently wait for the trend to come down to this level before they will pick correction to the upside. So it's better you wait for it to end before you enter your market. You understand? Are you with me?
Yes, sir.
So did we check another market, or you need to go and master this or study the chart? Okay, we should check another market.
Yes, please.
All right. I think we should check things like GP.
Okay.
All right. Are you with me?
Yes, please.
Yes, sir.
Ilaman, are you there?
Yes, sir. Yes, sir.
You remember this trade, right?
The last time I came.
No,
when?
There was a time this trade was around here. This trade was around here when I came to your place.
I forgot to start.
No, there was a time this trade was around here when I came to your place. GBP pair. I told you now, GP pair and JP1 and GP chief. I told you to monitor.
Okay.
Now we have this one. You see, like I told you again.
Yes, sir.
Like I told you, this is a daily chart. Okay. Let me switch to so that you see it clearly. Like I told you, in the market, you only have buy and sell. We only have buy and sell. The consolidation market is where we lose money. So you have to be patient before you jump into the trade. You see? It's coming up. My network. It's my network.
No problem.
They said I'm running out of time.
I'll see you.
Yes.
All right, let's do this sharp. You see? All right.
Okay.
Now I told you only but 3 types of markets: impulse, correction, impulse, right?
Yes. Yes, sir.
Now, don't worry, maybe next time we'll check from the beginning of the trend, like overall. Now you see we have sharp impulse to the downside, right?
Yes.
Yes, sir.
Now we have correction. So whenever you see sharp impulse to the downside or upside, all you need to do is to wait for a correction, pullback. You can call it correction, you can call it pullback, you can call it ranging market, or anyone, because price action call it pullback or consolidation or ranging, but we call it correction waves. You understand? So you wait for correction to happen. After the correction has happened, then you ride the market to the downside. So when you look clearly now, when you look very well, you see that this is a correction market, and this correction has a name. Call it. You see, this is this is this is 1, this is 2, this is 3. We call it flat correction. Like I told you before.
Okay, sir.
Like all these things happen. Like this is a similar market now with catch shift now we just did now.
Yes.
Yes.
Now after the correction, what happened next? The market drops. The market drops over 1,000 pips.
Yeah, that was the question I was going to ask. That in such a situation like this, when you're looking at, okay, after the completion of the structure, it's going to
Correction.
Okay.
of the correction, it's going to drop. How do you know how long it's going to drop? How far it's going to drop?
Yeah, like I told you now, we have Fibonacci levels. We have retracement, we have extensions. You understand? Which I told you we'll treat about that later.
Okay.
Like this correction, they have Fibonacci levels where you expect reversal to happen so that you understand. But in case, because there are sometimes market used to extend. Market can get to this level and you jump into the trade and the market keep extending and kick you out from the trade, then drops. You understand?
Yes.
So what you do is what? Once you see that the correction is complete, you wait for the market to give another impulse to the downside, then correct a little flag, then you join the market and drops. If you look very well, you will see that the market gives us a correction. And when you go to lower time frame, you will see the correction clearly. Because this is a 4 hour. When you move to like 1 hour, you will see the correction I'm talking about. You see, here is a correction. So you can enter the trade from here and you can also enter the trade from here. But whatever you are doing, your stop loss will be above the structure.
Okay.
That is it.
All right.
So I would like you guys to help me start from that structure I just showed you now. Look for every market, look for a particular structure I just showed you. Structure is like box. If you forget the structure shape, use box, 4-corner box, remember it.
Okay.
Okay.
When you get it, guide it with your trend line, then send the pictures in the group.
Okay. Of which pair?
All right, sir.
Any pair, any market, just look for them. Any pair, any market, you'll see it. You'll see.
All right.
We'll treat
No problem.
patterns next time. But this one, just look for this particular market pattern, this flat correction. And after that, we'll move to other correction patterns. Master them.
All right.
Right. Thank you.
Thank you very much, sir.
Yeah, I will send the video. It's like I'm recording it. I will send the video to the group also.
Okay.
Okay, sir.
Yeah, thank you.
You said you sent us a note or PDF.
Yeah, I will send it. Yeah, I will send it. Don't worry, I will send it.
All right, sir. Thank you, sir.
Now we are moving into wave. Elliott wave. How to Elliott wave. You understand?
Yes.
So Elliott wave is what have all the structures completely, but it's very, very complex. So I want to have an idea about it before we start reading it.
Okay.
Okay, sir.
Thanks.
All right. Thank you.